Welcome to More Wealth Retirement Talk with Shawna and Dave Moore of More Wealth Management. Retirement planning comes with unique challenges like managing market volatility, staying ahead of inflation, and building a strategy that aligns with your goals. On this show, we'll tackle your biggest financial concerns, share actionable insights, and explore strategies to help you navigate your journey to retirement confidence. Now let's get started with More Wealth Retirement Talk.
Welcome back to another episode of More Wealth Retirement Talk. I'm Dave Moore, joined by the brains of this whole operation, my better half, Shawna Moore, author of Retire with More. And of course, Jaclyn's here as well to keep us honest and to make sure Shawna and I don't ramble into conspiracy theories about why grocery store rotisserie chickens are always so cheap.
I mean, Costco rotisserie chickens, I support that. But I'll be the one who keeps the banter flowing when Dave's jokes get a little questionable, maybe some dad jokes in there.
Hey, somebody's got to keep the dad jokes alive. Come on. Speaking of, should we start off with one?
Sure, go ahead.
All right. You ready? Jaclyn, are you ready?
I'm so ready.
Two robbers walk into a liquor store. One robber picks up a bottle and says to the other robber, "Is this whiskey?" The other robber says, "Yes, but not as whiskey as robbing a bank."
That is a dad joke for sure.
Mm-hmm.
He's the king of dad jokes.
That was hilarious, actually.
That was pretty good.
You know, the
Well,
listeners are laughing.
I do have to share with our listeners really quick that we just basically had a laughing fit for about 10 minutes and we could not stay serious to begin this episode. So we have a really great time doing this podcast, honestly.
We do. But someone has to keep us on topic, right? So apparently,
Let's get serious.
that's my job today because we are talking about something that actually is mysterious to a lot of people, and that is life insurance. And since September is Life Insurance Awareness Month, we thought this is the perfect time to pull back that curtain.
That's right. September means two things: pumpkin spice everything, and apparently death benefit discussions.
Apparently.
Well, which really actually go hand in hand if you think about it, because nothing makes me want to think about, my mortality, like spending $7 on a Starbucks latte.
Exactly.
If you're lucky, it's $7.
If you're lucky.
Well, pumpkin spice in there really racks up the price.
It might be worth it with pumpkin spice, though. I think it is.
Yeah.
Pumpkin chai, the
That
best.
works. Yep. But all kidding aside, most people think of life insurance as something that you only buy when you have young kids or a mortgage. And while that's true, life insurance can also be a powerful part of a retirement plan. So it's more than just a check to your family when you pass away. It can also be about creating financial flexibility while you're still living.
So we're not just talking about leaving money after you're gone. It's also about how life insurance can impact your life before that point.
I like to think of it as a financial safety net, but one that can also double as a trampoline.
Nice visual. Bounce into retirement. So we're not just talking about a death benefit here, but how it can give you options while you're still living.
I think a lot of listeners will be surprised at how flexible life insurance can truly be, because most people either think of it as that old school term life you buy for 20 years and forget about, or the really expensive kind of like the uncle warned you about.
Exactly, Jaclyn. And both of those can be right and wrong depending on your specific situation. So let's break it down. Term life is the simplest. You pay a set premium for a set period of time, maybe 10, 20, or even 30 years. Now, if you pass away during that time, your beneficiaries will receive the payout. But if you outlive it, the coverage ends. So it's affordable and it's a great coverage for temporary needs, such as when you're raising kids, covering a mortgage, or making sure that your spouse is going to be okay financially should something happen to you.
So basically, cover me until the kids graduate and the house is paid off. Kind of like training wheels for your family's finances.
Yeah, except hopefully no one falls off the bike, right?
Exactly. Now, permanent insurance, like whole life or index universal life, that is different. It lasts as long as you do, and it builds cash value over time. Now, you can access that cash value potentially tax-free when done correctly while you're still alive. Now, it can cost more and it does require a long-term commitment.
So an easy way to think about it is term would be like renting and permanent is like owning.
Yes, Dave, that's a great analogy.
Except with a house, you don't usually get the option of using the equity to pay for a medical emergency or retirement income without selling it.
Right. And that's where life insurance can actually give you flexibility. So here's another thing. Here's where life insurance can get really interesting. So many of the newer policies offer living benefits. And then what that means is that if you get diagnosed with certain chronic or critical illnesses, or if you need some sort of long-term care services, you can actually tap into your death benefit early to help cover those costs. So here, for example, we had a client, a couple in their early 60s. They'd done very well saving, but they were worried about long-term care. Now, instead of them buying a standalone long-term care policy, they chose a life insurance plan with a living benefits rider. That way, if one of them needs care in the future, they can actually access part of that death benefit while they're still alive. And if they never need care, that death benefit still goes tax-free to their kids.
And that's huge because long-term care is one of the scariest expenses in retirement.
Yeah, it really is one of the scariest expenses. You know, nursing homes and assisted living can cost $5,000 to $10,000 a month, depending on what services you need and where you're located. Traditional long-term care insurance is expensive, and many people don't like the use it or lose it factor, so they choose just to go without. But with life insurance that has these riders, you don't have that issue.
So even if you never need long-term care, your family still gets the death benefit.
Exactly. So it's protection either way.
It's like having car insurance that pays you even if you never get in an accident. Sign me up for that.
Me too.
Yes. Now, let's look at another overlooked benefit. That would be using life insurance for tax-free retirement income. So with certain permanent policies, your cash value can grow tax deferred, and you can potentially access it tax-free through policy loans.
Wait, did you say tax-free? That's like a magic word.
Yeah, because most retirees don't realize how much of their Social Security and 401k withdrawals could be taxed.
Exactly. And we've seen people shocked at how much their tax bill is in retirement. So using life insurance as part of the strategy can give you a bucket of tax-free money to draw from, helping you stay in control of your tax bracket. So, you know, if all of your money and all of your savings are in pre-tax accounts, Uncle Sam is going to be your biggest retirement partner. So using insurance strategically can help diversify that tax picture.
So it's like sneaking in the side door while everyone else is stuck waiting in the long line, right?
Right.
And let's be honest, no one wants to invite Uncle Sam on the family RV trip.
Nope.
Agreed.
Definitely not. We agree with that.
Okay, Shawna, so time for the real talk part. What are truly the pros and cons here?
Well, there's a few. So let's go through the pros. The pros: life insurance provides protection, flexibility, and potential tax benefits. It can cover immediate needs with term or long-term needs with permanent policies. It can even double as a long-term care plan. Now, the cons are permanent policies. Again, they're more expensive. They do require a longer commitment. And if you don't fund them properly, they can actually lapse. So you have to make sure it's built properly. And for some people, term is enough. They don't need permanent policies so they can utilize a term policy instead. But the key is knowing your goals and picking the right tool for the job. And with term, the con is obvious. You know, if you pay for all those years and if you outlive it and the coverage ends, you don't get anything back in return.
So the pro of term is it's cheap. The con is you may waste it if you don't die early. The pro of permanent is it's flexible and lasts forever, but the con is you have to be ready for the higher cost and long-term commitment.
Exactly, Dave. And that's why everyone's situation is unique. There is no one size fits all.
So like any tool, that's great when used the right way, but you wouldn't try to fix a leaky pipe with a hammer.
Dave, I'm sure you've probably tried that.
I plead the fifth.
He probably has.
Now, if you're listening and wondering which side of the fence you're on, that's where Shawna comes in. She offers complimentary 15-minute discovery calls, just enough time to figure out your goals and whether term, permanent, or a combination makes sense.
And you can call Shawna at 833-4MY-WEALTH. That's 833, the number 4, MY-WEALTH, or head over to her website. And here's a bonus. If you schedule a call this week, you'll get a free signed copy of Shawna's book, Retire with More, Moore.
Thank you, Jaclyn. And that's right. Because whether we're talking retirement planning or life insurance, education is the first step. So we do want to be able to give that book out to our listeners.
And speaking of education, don't forget Shawna's going to be the featured guest on Tom Hegna's show, Financial Freedom, this Sunday, September 7th at 9:30 a.m. Eastern, 6:30 a.m. Pacific.
And you might think that's early on the West Coast, so brew that coffee strong. I know I'll be up because guess what?
What's
the
that?
First Sunday of NFL football. So
That's
I get to watch your interview, and then I get to watch the NFL pregame shows, right?
Exactly. Yes, I will. I will allow you to do that.
What
I'll
a
be watching
Sunday.
with you.
Hey, and if you all don't know, Tom is one of the most recognized annuity experts in the country, and Shawna is going to be sharing her insights on retirement planning alongside him.
Yes, and we're really excited for that. We're going to be talking all things retirement planning, income planning, tax planning, protection strategies. So you definitely want to tune in.
Shawna, I am so excited and happy for you, and I cannot wait to hear it.
Thank you. And so just to wrap up real quickly on the life insurance isn't just about leaving money behind. It can be about protecting your income, covering long-term care needs, and even creating tax-free retirement income.
And the right plan looks different for everyone, which is why it's worth having that quick conversation with Shawna and finding your financial services professional.
And let's be honest, it's also about making sure your spouse doesn't have to auction off your baseball card collection to pay the bills. That's why my collection is hidden from my spouse.
That is true. Always bringing in a baseball analogy, aren't you?
Baseball and football. Those are the seasons that we are in.
That's right.
That is true.
That's
That is
right.
true.
Gotta love the fall.
Yes.
Anyway, we'll leave it there. Thanks for joining us on More Wealth Retirement Talk. Don't forget to subscribe on Apple, Spotify, and Amazon. And remember, you can always reach us at 833-4MY-WEALTH or on our website. And if you're listening while drinking that pumpkin spice latte, cheers to you.
Cheers. We'll see you next time.
Thank you for joining us for More Wealth Retirement Talk. Don't head into retirement without a strategy that addresses both income and taxes. For more information, please contact Shawna and Dave Moore at Moore Wealth Management at 480-800-7077 or visit morewealthmanagement.net. Join us again soon for another episode of More Wealth Retirement Talk.
Advisory services are offered through More Wealth Partners, LLC, a registered investment advisor in the state of Arizona. Insurance products and services are offered through More Wealth Management, an affiliated company. More Wealth Partners and More Wealth Management are not affiliated with or endorsed by the Social Security Administrations or any other government agency. All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Federal Medicare Program or any other government agency. Calling this number will direct you to a licensed sales agent.